So you can see here, you've got inefficiency here. So you've got a fair value gap, inefficiency here. You've got an order block on the 30-second time frame. You've got a low that I want to be induced, and you've got this trap as well. Okay, so let's see it pan out a little bit, and then start. Boom! Look at that. Crazy, right? What's happening, family? It's your boy Rons with another trade breakdown. If you're new to the channel, then welcome. If you're a returning viewer, then welcome back, right? So what I've got for you guys today is a quick London session scalp that I took, a 7-hour scalp that I took in the morning of the 23rd of November. And I'm going to break it down for you real quick, right? And because it is a scalp, I'm not going to go on to from the really hard time frames. I'm starting from the 15-minute, right? So we're going to break this down from Frankfurt open right through to the moment I took the trade, and I'm going to show you what my logic was, what I was thinking, and hopefully you can learn something from it. Okay, so what you can see here, this is Euro USD. This is the 15-minute time frame. What can we see so far? So what I've done here is I've put this line up here because this line is just showing that we've taken a previous high to the left. All right, I won't go back and show it, but it's a high, it's a key high we've taken to the left, and then we've had but before that, sorry, we've had at the bottom here, you see this, we've got this trend line type liquidity, and we've got this inducement, which is displayed by this green box that I've put just to show you, just to make it easier visually, so you can see what I mean by the inducement. So that's the inducement of this trend line liquidity on these lows, and then the high was taken, and then we began to retrace a bit and pull back, right? So we are now on the morning of the 23rd of November, and let's start marking up charts so we can start making sense of it. All right, so first things first, what I like to do is mark up the liquidity, as you've seen in previous videos. So we can see straight away that we've got, say, these highs, right? That trend line type liquidity highs, right? And you see here, Asia high has just been taken just after Asia had finished or was finishing. And then we're going to see how price begins to play out. But what you can see, which is interesting, is this aggressive move down, right? And this aggressive move down, so we'll quickly delete this. This aggressive move down is, enticing sellers, because if people are trying to chase the price, then if they're seeing this aggressive move down, they're going to be trying to sell. And then what's happened is it's come down, it's mitigated something down here, or taken out these these lows, and then we've reversed again. But as we know, prices are only ever seeking to do two things. It's only ever seeking liquidity, right, or trying to fill inefficiency. There's the only two things that it looks to do. So what should we do now? Let's go down to the 5-minute, right? The 15-minute, I've marked out these highs, and this is what my eyes were at. I'm thinking, surely, price was really interested in these highs. So if we go into the 5-minute, we can start to see how price played out, right? Okay, again, so we can see here that price had actually created some more equal highs with, or relatively equal highs with this high here, right? So again, it's just creating more resistance, should we say. And right on the 5-minute as well, you can see that you've got these lows here, and these lows were induced and taken up by this aggressive push down, okay? So we had this aggressive move down, and we had price staircasing back up, and now it's about waiting for price to make its move. Because although yes, I want to target these highs, it's just because that the liquidity is sitting there, it doesn't necessarily mean price has to take it out there and then. Price could have just come up, taken this high, or just mitigated this high, for example, right? And then if you wanted to, it could just go lower and then look to take out this low at the bottom. If price wanted to do that, it can do what it wants. So you have to wait for price to show its hand first before we make our move, right? So let's see how price played out a little bit. So if I forward a bit, this is the 5-minute. Okay, so we're going to the 1-minute to give it even more clarity. Right, perfect. So you can see here, so this is the high that I've drawn out. So you see here, the high was just about taken, just about, right? And what a lot of people would see here, they would see price take out Asia high, so to speak, right? And then see maybe a high to the left been taken, see that as, I say, a medium inducement, and think, okay, so now we must go lower. And no, you have to think about the higher time frame narrative. What is the 15-minute time frame doing? What is the 1 hour time frame doing? Depending on what those time frames do or are doing at the time will depend on what happens next. But what you can see here straight away is on the 1 minute, you can see these trendline type liquidities, right? Or channel type behavior from the market. But let's see how it play out some more to see what happens. Okay, so price is playing out, it's creating like a channel, and then boom. Okay, cool. This is where now things get very interesting. Okay, so we've had these lows taken, right? So you had these lows taken, this channel taken out to the low, and then we've had this response here. So the question now is, go back to the 5 minute, give us a bit more context on what we're looking at. Okay, we've had this. So this aggressive move down now, for me, is a clear inducement, and the inducement gets confirmed, right? Once, well, you can say it gets confirmed once you get the aggressive move away. So I'm looking at this now. I'm thinking, okay, so what can I do? Where can I get into this trade? Because I'm liking the fact that we moved an aggressive move down. It's inducing these lows. It's inducing sellers to come into the market. But I now want to get into a buy. I know I want to aim for these highs, but the fact is, it's not just the fact that we've got the liquidity here, but we've also got an inefficiency and a fair value gap up here as well, which I forgot to mention. That is also key. So because we've got this fair value gap at the top here, I'm like, okay, so we've got the liquidity that the market likes to seek, and we have the fair value gap or the inefficiency that the market likes to seek as well. So I'm not looking for a buy once I've seen this aggressive inducement to the low, right? But I also know that this probably isn't going to be a trade that I'm going to hold. Let's go back to 50 minute for a second. Although you can look at this and think, you know, we've had this inducement here on the 15 minute to the low, and then we've gone higher, taken out a high to the left. Now we've retraced lower. This inducement low is yet to be taken out. You could say that it's actually been mitigated here on the higher time frame, right? It's yet to be taken out. So you can say we're still potentially still bullish right now. Who knows? What I was interested in was these highs being taken and me getting into a a scalp trade into these highs and potentially into the fair value gap as well. That's what I was looking at, right? So if we go back down to the 1 minute, we can see here now price induced to the lows, and we're now getting an aggressive move away. So when you see a price action like this, the odds of this being a valid place to enter is ridiculously low odds, right? So I see this straight away. I'm like, okay, so this is blatantly a trap, right? If you want to call it a smart money trap or something else, I don't know, but it's a trap. So I'm like, this is perfect because I know I can at least target this. If I get a reaction here and I get an entry, I'm going to take it to at least these highs to be taken. And then I've got the other highs as well. Now I've got these other highs to the left, right? So you've got all of these highs. Look at it. It's beautiful. It's waiting to be attacked. So down to the 1 minute again. We've got the inducement to the low. We've got the response. And now let's see how things start to pan out. Okay, so we're trading into the trap now. So, well, what I believe to be a trap. Listen, I could be wrong. I'm not always right. So let's see how it pans out some more. Okay. Rejection from the trap. Move back up into the trap. All right. Now this is where it gets interesting, right? Because I knew that now I liked the price action. I liked it. The reason why I liked it is because we've got the trap. We haven't moved aggressively away from the trap. We've moved aggressively away from the inducement low. We've also got, you know, so we've got the inducement here. That's the inducement, right? But within the inducement, what we've got here is this wick. And you're probably thinking, what is the wick, Romel? Like, Roms, what is the wick? And then what I actually did was I went into the 30-second chart to give me more clarity. I said, okay, cool, perfect. So what's great about, we've quickly moved this green box just for clarity. But what's great about when you have more market experience, you get to see things on the higher time frame. You see things on the higher time frame, knowing what they are on the lower time frame. So on the 1 minute, when I saw this wick, and I saw the way this is wicks down and gone aggressively back up, I knew that on a lower time frame that this would be a potential order block. So I've seen that as an order block. So I'm like, this is perfect. But what makes it perfect is the fact that I've got an inducement low that I want to be induced into the entry, right? It doesn't mean necessarily that the order block's going to be mitigated, but what I did know is that I wanted this low to be induced. So I was ready to enter the trade here with a target, back to the M5, with a target initially, first of all, at least there to be safe and maybe take something off, but the target here for 7R. That's what I was looking at, right? So I'll go back to the 30 seconds so we got clarity together. So you can see here, you've got inefficiency here. So you've got a fair value gap inefficiency here. You've got an order block on the 30-second time frame. You've got a low that I want to be induced, and you've got this trap as well, okay? So let's see it pan out a little bit. Market responds to the trap, comes back down. Everyone's thinking, okay, we're bearish, this is great. And what's even funny about this is you can see this is another channel that is creating as well, if you can see this, right? Anyway, price responds to the trap, price comes lower, and then let's see what happens. Boom, taps just below the low, induces the low, and then rejects. Okay, and then start, boom, look at that. Crazy, right? So low gets induced, we respond beautifully, price creates another order block on the 30-second, taps into that, and then it goes to the target and taps in. And then that was that. I was out of the trade and it was beautiful. The thing is though, guys, I've got to show you guys something that really annoyed me today. And for transparency, basically what happened to me is because I was using a different feed. So this is forex.com, but I was using Oanda. So on forex.com and on my MT4, this low was induced, right? But let me show you something on Oanda. Okay, guys, so this is now the Oanda feed, yeah? So I'm gonna remove some of these markups, just other things I was looking at earlier, right? But this is the Oanda feed. So you've got it's the same price action as before, but this just shows my true entry. It shows that I did use a higher lot size, so I did get a bit more than 3R because I risked a bit more. But yeah, the R&R was 3R in regards to my entry because I entered late. But what I wanted was the 7R, so I now wanted to display the setup that I was looking for. But as you can see here, on this feed, Oanda feed, these lows, so this low wasn't induced. Can you see that? The low wasn't induced. So I saw this and I was like, okay, so I'm waiting for the low to be induced, and then I'm gonna hit buy. And maybe I could have used a limit, but I prefer sometimes just to do market executions if I'm at the computer, because it means that I'm definitely in, and sometimes the limits get missed because when you're trying to trade precision. So yeah, so this was actually my true entry, and I put it into my Telegram group as well. You may have seen. But so the R&R wasn't great in regards to what I actually I was actually able to achieve when I say that. But the move itself was a 7R move, and yeah, and nevertheless, it's still winning trade, right? But I'm just showing you the importance of using the right feeds. I'm not going to use Oanda again because it cost me today. But however, it is what it is. But yeah, so that was the move. 7R trade, a nice little scalp. Hopefully you understood the logic, and hopefully you enjoyed this video. Don't forget to hit like, hit subscribe, and if you want to watch more trade breakdowns, hit that video in that top corner. All right, so God bless, take care, and I'll see you guys soon.